Hey everyone, welcome back to Corporate Decoder, the place where we decode the secret language of corporate filings. And today we're diving into Booking Holdings Incorporated's latest report. And let me tell you, they've been busy issuing some serious debt. So what is the big news? Booking Holdings, the travel giant behind brands like Booking.com and Priceline, has just announced they've entered into some pretty significant new agreements regarding their senior notes. And this is happening on the heels of a rather large offering that just closed. Okay, let's break down what this means. The company has a whole bunch of different types of debt called senior notes that they use to fund their operations and growth. These are essentially loans that the company promises to pay back with interest. We see a long list here of these notes with various interest rates and maturity dates. For instance, they have 4.000% senior notes due in 2026, and then notes due in 2027, 2028, and all the way out to 2046. It shows a company that is actively managing its debt portfolio over many years. Now, the core of this filing is about two new sets of senior notes that are being issued. The first is for 750 million euros of 3.00% senior notes due in 2030. Think of these as loans that mature in 2030, and the company will pay 3% interest each year until then. The second is another 750 million euros, but these are 3.625% senior notes due in 2035. These mature later and carry a slightly higher interest rate. So, they are raising a significant amount of money, over 1.5 billion euros in total, through these new note issuances. It is crucial to understand that these are unsecured obligations, meaning they don't have specific assets backing them up, but they rank equally with other senior unsecured debts the company has. These new notes come with terms that allow Booking Holdings to potentially buy them back before they're due. For the 2030 notes, they can call them back after a certain date, essentially paying off the debt early. The price to do this involves the principal amount plus any interest due. And it is calculated based on present values of future payments discounted at a specific rate plus a small premium called basis points. This is fairly standard for corporate debt, giving the company flexibility if interest rates drop or if they simply have excess cash. Now, like all debt agreements, there are consequences if things go wrong. The filing mentions typical events of default, which can include not paying back the loans, breaking other agreements, or even bankruptcy. If one of these happens, the trustee or a large portion of note holders can demand immediate repayment of all outstanding amounts. Beyond just agreeing to the terms of these new notes, the company also announced that this whole senior notes offering was successfully completed. This means they've already sold these notes to underwriters who then sell them to investors, and the company has received the cash. The total amount raised in this offering was a massive 1.5 billion euros. This is a significant capital raise, and it tells us Booking Holdings is likely planning for expansion acquisitions, or perhaps shoring up its financial position. The legal opinion from Cravath, Swaine & Moore LLP is also included here. This is just confirmation from their lawyers that all the legal paperwork for these notes is in order. Looking at the bigger picture, Booking Holdings is clearly in a phase of significant financial activity, raising substantial capital through debt. This isn't necessarily a bad thing for a company of its size and stability. It suggests they're confident about future growth and have a clear strategy for deploying this capital. The different interest rates and maturity dates show a well-managed approach to debt financing, balancing cost and longer-term commitment. However, it is always worth noting that increased debt does increase financial risk. If the company's revenues falter or interest rates rise unexpectedly, servicing this debt could become more challenging. But given Booking Holdings' strong market position and consistent performance in the travel sector, these risks appear manageable. Overall, this filing shows a proactive and ambitious company. They're leveraging the debt markets to fuel their growth, and the successful completion of this large offering indicates strong investor confidence in Booking Holdings' future prospects. Alright, that is our breakdown of Booking Holdings' latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more exclusive content and discussions. Thanks for watching. See you next time.